Hi everyone, you're very welcome to another video here at the Alpha Capital Group. In this video, we're going to be taking you through a sample failed challenge. So this is a challenge that one of our participants has taken, has unfortunately failed, but we're also going to look at some of the aspects around the trader's performance, alluding to what are the elements that maybe are where have they maybe let themselves slip up. And then, of course, looking at maybe areas of improvement. Now, of course, this would be solely down to the trader. This could be relevant to you if you are seeing some similar themes to yourself. So our goal here is to obviously give traders as much information to allow themselves to read the metrics, understand their own performance, and get the most out of it. And of course, obviously making sure they're as consistent as possible, as early as possible, and obviously proving to be profitable. So firstly of all, if we look at the account very, very quickly, we can see here that the broader metrics are showing that the client has started their challenge or evaluation process at the early parts of November. In fact, last Friday, we can see very, very clearly that the trader in question had almost got to the 8% target. So it's got to $107,770. So they're only $30 away from passing. Very, very close effect. Now, ultimately, what's happened today, given the volatility in the markets with the fundamentals and the movements in the CPI figures, of course, and the ultimate effect that's had in the stock markets, we've seen some adverse conditions and we've seen a number of traders ultimately fail on that. So with this here, one of the key takeaways, we're obviously seeing that this trader has proved to be quite consistent. Up until today, the average profits were obviously continuing to grow. We had a 1 or 2% increase on Monday. We then had that follow-up with that massive move of another 3 to 4% on Tuesday. And of course, by Thursday, they'd almost passed the account. So this trader and this individual has proven that, right, they're not fully profitable, but it's a case of, for them, can they minimize the downside exposure? Can they minimize their risk and ultimately stay within these daily trading objectives? So the daily trading objectives has proved to be their shortfall because they've had a loss today in excess of the 5%, the 5,300 daily loss. Of course, they have broken that with a loss of nearly $7,000. So one thing that you can clearly say is here that this trader is obviously quite good. They know what they're doing in the broader markets, but they maybe need to handle their risk and their discipline maybe a little bit more closely to minimize their drawdown limits. And of course, the idea of capital preservation and holding on to the capital on their account. So broadly speaking, 44 trades through the course of the last week or so from last Friday shows that they're quite an active trader. Their win rate obviously is 25%, but as traders, we're not about solely looking at the win rate or the strike rate as others might refer to it as. It's all about the risk reward element. It's all about what you're winning on average versus what you're losing on average. And up until today, you would actually see that this trader has done exceptionally well. In fact, almost with very little to no drawdown, with the exception of a little bit on Monday, has had a very, very good week. And of course, that has been undone today by the markets moving against the trader in terms of the positions that they've opened. Now, broadly speaking, the average risk reward of 0.96 means that, including today's trades, including the performance today, they're averaging about 1-to-1. So that's another element for the trader to maybe consider, is can they maximize that? Now, although looking early onsets on the figures from Monday, Tuesday, and Wednesday, you're probably expecting that risk reward to be higher. And of course, with the movements going against them today, you can see that obviously the risk reward has reduced accordingly as their losses have increased chronologically. So that's obviously something to consider. Broadly speaking, this trader has done quite well, but obviously just needs to focus on his daily exposure, daily risk exposure, making sure that if they are carrying drawdown, they're still staying within that 5% limit and thereby staying within the game. So even with a loss today, of a controlled loss of, let's say, 4.5% under the 5% daily threshold, they're still ending the day in profits in terms of where they began last Friday. So there's still very much plenty of time for them to recalibrate their trading plan and get to the 8% target that they're looking to achieve. And that is obviously something that we want to encourage as best as possible. So as we look at the trading performance, we can see here at the early parts of the week, they've actually taken a number of losses to start. So you can kind of see here that this trader trades specifically Dow Jones, Wall Street, Dow Jones US 30, and has taken a number of losses to start the week. So obviously on Friday, they took a loss and took a number of losses in the back of NFP and actually finished the week actually nearly down. So you're looking at this 72, 62, 500, 400, 300, and then the 200 loss to finish. Shows that last week the end wasn't obviously the best of starts. Now, of course, they are trading $15 per point, 15 lots. So that is quite a punchy position size as well. So they're obviously looking to snipe in the markets, because you can see here that a lot of the stop losses are quite minimal, or they're either moving their stop loss accordingly against them. So that's obviously something to consider. Now, when you look at kind of the price action this week, Monday, Tuesday, Wednesday, you can actually see that the trader has done a little bit better, even though it had that losses kind of on Friday and obviously the early parts of Monday. You can see that Monday evening, Tuesday, Wednesday, Thursday, they have come back with significant wins. So you're looking here kind of gradual accumulation against some of that drawdown, that early drawdown, but then they're coming out here with a $1,400 win and a $3,000 win. So that's going to really accumulate in favor of the traders. And of course, if you're looking at this, you're seeing on average, right, they're losing, right, you've got 70, 60, 500, 400, 300, 200. So a lot of the losses here are kind of somewhere between kind of 200 to 300 on average that you could kind of determine. Now, if you're looking at a $250 to $300 loss on average, then what are you looking at in terms of the risk reward? Well, if you look at the price action and the traders' performance on, let's say, Tuesday and Wednesday, broadly, where they've actually come back with some winners, you can actually see here when they've seen some smaller winners, of course, but then they've got some big winners too. So that obviously helps to bring the risk reward up as high as possible, maximize the return on the back end, and obviously allow them to work towards that 8% target in which is currently set out in the trading objectives. So from that perspective, if you follow the price action through, they've actually had a fairly good Tuesday. They've had a fairly good Wednesday. And of course, even through the early parts of Thursday, a much more controlled fashion even here. So like you're kind of looking at, there was a couple of losses yesterday into yesterday's close at 1200. So maybe there's an element there of the trader having, or maybe running those losses a little bit too extensively. And that's of course followed up today as he's hit that 5% daily loss allowance. So I suppose from an area of interest, you're kind of seeing there at $1,250. That's far bigger or far more expansive than some of the losses he's had earlier in the week. And again, that's showing the maybe the over leverage or the position sizing is quite chunky. And then of course, when he or she gets caught offside, then it's a case of trying to hold on for as long as possible to see if there is a change until there's a line in the sand, and then they obviously have to cut that position. So again, on today, for example, we've seen a $3,000 loss, we've seen a $1,200 loss. So that's really undoing a lot of the good work that we saw take place Tuesday and obviously yesterday. Tuesday and Wednesday, the client, when he wins, he tends to win big, or she seems to win big. But then of course, when the trades go against them, they're not cutting those trades soon enough. And of course, they're taking quite chunky losses as well. So 300 loss, a $1,150 loss. And then, of course, when you follow that up today, 700 loss, 200 loss, 700 loss, 1,190 loss, 1,100 loss. So there's successive losses. So maybe there's probably an element there of potentially over trading or revenge trading because of the movements that the markets are obviously visually seeing. So it's all about capital preservation. It's all about minimizing the downside exposure, staying within those thresholds. And if it's a case you approach that 5% target, knowing that maybe that's the time to walk away, wait for the daily reset, and then recalibrate and refocus the following day when you're working off a cleaner slate. And that is obviously something to encourage upon. So there is a lot of good things here in this trader's performance, but there's also maybe things that they should look to improve upon to maintain or develop that consistency. And that is obviously something that we feel is relevant for nearly every trader, regardless of the asset they're trading, regardless of the time horizon that they're trading off of, whether it's a short-term trading plan or whether it's a medium to longer term trading plan as well. All right. So hopefully this video has been useful for everyone in terms of looking at previous failed challenges to kind of give other traders who failed challenges as well some feedback that maybe that they can take into consideration to help their own performance. Thank you, everyone.